So, welcome to the channel. Here's Trader Jan. Now we're gonna do the review for last week, Friday. We had a mess, or I had a mess of a trading day. I made minus, how many ticks? A lot, like minus a lot of ticks. So, let's review first how our locations if they were precise enough. Let me clean up the screen a little bit here so we are not being distracted too much by everything. So this is Friday. That's our 1500s tick chart, and the markets, the yellow part is the Asian session, blue is the European session, and the green is the US session. So looking at how the market reacted, actually that location here was pretty good. This one here, but yeah, kind of. So at least the market reacted in some way here, but wouldn't consider that one as a full success. This one here, it reacted later, actually at 3 o'clock, which is not really a time to trade. That location here reacted quite well, first as a support and then as resistance. So that would have been quite nice here. So what I'm looking for is actually potential targets. So first of all, with the locations, I look for entry into trades. So I wait until the market goes to that location and then wait how the market reacts and then go. So looking at this one here, then looking at the market here, how the market here reacted, and then making like a down move of 50 ticks or even more of 200 ticks. That would have been quite a nice trade if I would have listened to my own wisdom, so to say. So I look for the locations for potential reaction of the market and trade the reaction. Then what I'm looking for as well is for potential targets. So when I go into the trade like here, do I let it go until here or here or here or here or here or here? Yeah, after the facts, it's always easy to see those setups. So, but let's stay focused. So this location here was quite nice. It was a resistance, then another resistance, and then, or it was a support, another support, and then a resistance here. This location nice as well. There's a little range. Oh, that would be nice for range trading. Now, as mentioned after the facts, I think I did some range trading there, and I failed again. Here, yeah, market reaction, market reaction, market reaction. Go a little bit further. Then, yeah, it's a Friday, right? It's not moving too much. And yeah, so the locations itself shouldn't be too much concerned about my skill about defining those locations. They look actually pretty good. Now looking at the actual trades which I did. How do I see those trades? Let me show that indicator trades on chart here. So those yellow marked things are the trades, and the same issue like last time is all shown in kind of yellowish on yellow and yellow. Very nice visible. Here there are some you can see, some not. I guess Yeah. It looks like the ones which were in profit, shown in blue, and the ones which were in loss, shown in yellow. And this one here is a loss. So you see, I didn't have many wins. This one here is a win, so blue. Oh, nice. Okay, at least we found the logic behind the different colors. Now, long story short, if I look at the trades here, so here obviously wanted to trade up, but against the whole market direction. So why the hell do I trade up here and then up again, trading totally against the market bias here. So the market is clearly in a down move. So let me check a bit more in detail. Let me check my little helper here. The market clearly is coming up here, going down, lower high, lower low, lower high. Okay, consolidating a little, but it comes from up and then it goes down. And also, but this part we don't know yet. However, here, why the heck do we go against the trade here? I mean, this is not very wise. So in that case, for next time, instead of going up there, I should wait until the next uh, retrace, and then go down from there, which I kind of, if I look at here, I kind of tried to. Let me figure that one out. So here, yes, indeed, I figured that one, and my 20 ticks stop loss hit me here. So it is actually nicely done here. And then I tried a second entry here, and then I feared again. So I could have done this entry. Okay, well, got stopped out. Shit happens. Next time, I guess I need to make sure that, like, after that candle, let me open one of my favorites, which is the demand index. Here that goes up, okay. And then the second peak, even though it's kind of like not really, but ends up. So I didn't wait actually for the second confirmation. I should have done it a trade here. This is an early entry, but in that case, I should actually make sure that my stop loss is above the limit here, and then should enter. Or the second entry, then I got soft knees and I didn't follow through. I could have gone either here or that one as a target. So following up through here, okay, I tried to go short here, tried to go short here, stopped out, went short here. Okay, that's not too bad as a move, but it is more like within the range here. Should be more range trading like here. And then here, again, would have been nice little potential to trade there. So here I went short, okay, but at the bottom of the day, which may be better waiting until a proper retracel, which came here and then went down. Okay, but I wanted to check the breakout here, I guess, and I could have, after seeing these candles here, I should have gone out, like at least with this move. But hope took over, I guess. So then here another trade against the trend, no good. Then I wanted to go back. Those little micro moves here, I'm kind of really disappointed with me. Here, a nice one. That one really, that after this confirmation, and then it went back, and then I entered the trade. That is a good trade. And the target was this one here. So well, okay. So let's, and then here I did another trade here. Again, at the low of the day. I guess that was one of those FOMO trades. And I should actually be happy with maybe a 30 tick something. And I wanted to push it further, but no pushing in the market. No, the market doesn't care about what you think. Pushing your luck is not a good idea. So this today actually I'm gonna trade the a different chart. You shouldn't do that. Trading different charts. You should I should trade always one chart. But since that chart I traded already in the past, so I'm gonna try to reuse that skill. So looking, maybe the setups would have been more clear here with that chart. Let me shortly check that out. So here with that retracement here, obviously that's clear. Should be short, short, short. This one should be short too. Okay, that one was a bit, that's interesting. For my demand index here would have been easier visible because tops of the demand index have been reached here already. And then it went up, and then the next one is lower, went even further up, and then went completely down. So here I probably would have entered the market already here with my stop loss of 20 ticks, would have been fine. Would have run against me. I'm not sure if I would have been patient enough, 20 minutes, and then it went down. Here, this little zone, right, trading the breakout is good, but then trusting your setup, trusting your setup. Okay. Here, yeah, okay. There's one. I should have waited until this little peak and then breaking the breakout, the trading the move. It came back by 20. That would have happened anyway. Uh, Here, this one was a nice little signal. This entry was perfect, but would I have kept it? I don't believe so. Okie dokie. So that's about a review of the last day, trading day. It's already a long video, 13 minutes. So let's stop it here and let's move on for the market analysis for today. So we are prepared for this trading day.